All right, I've got something interesting to share with you with regards to the markets and how the media is trying to divert the focus of people and really to not allow them to think how to protect themselves against this machine that is being created and is been in existence for over 100 years to steal the personal wealth of ordinary people through the financial, through the banking system, through currency creation, and we're gonna see very small parts of one video from Mike Maloney, and then we're gonna cover like what the banks are doing and why people are basically being distracted and not being able to pay attention to how the banks and the elite is not just protecting themselves but getting ahead every single day. So enjoy, and I'll see you at the end of the video.
This is the borrowing fee. Looks like someone is in a panic to borrow shares of SLV. SLV is the exchange traded fund for silver, the big one. The borrowing fee nearly doubled in the last hour of trading, a new high on the year. And he just wants people to try and get this out. So I'm helping him here get this out. But look at this is huge, going from there to there in one trading day. So somebody is trying to borrow a lot of shares of SLV. Why do you borrow shares? You only borrow shares when you're going to sell them into the market. You're going to sell short. When you sign up for a margin-enabled trading account, so if you have a brokerage account and it's margin-enabled, you have given your broker permission to go into your account and borrow your shares and not tell you. So your shares may or may not be there. This is one of the things I do not like about all of these ETFs. It's hocus pocus, high finance hocus pocus. And so they borrow these shares, they loan them to somebody else who wants to sell short. He sells it short into the market, and now you have two people owning the same ounces. You think you've got ounces in your account. Your broker has not told you, gone in there, borrowed them, loaned them to somebody else who now has those ounces and sells them into the market. So now there's a new owner of the same ounces that you own. And the borrower eventually has to buy them back. But that borrower is betting that the price is going to go down. And you'll notice this happened toward the end of the day, is what Bob Coleman says. So if it's toward the end of the day, that's what made up that red doji that we just saw, the price closing down lower than the open. Now,
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer, and now back to the video.
this is nothing to worry about in the long term. But you have to sort of buckle up and be ready for all of this. And if you don't have a large enough position in silver, you may want to consider buying this dip. I never give advice. I just tell people what I see and what I do. But I do think that there's a little correction coming from the price explosion that we've had over the past few days. But the silver production in Mexico and Peru is way down. Silver production from Mexico and Peru, the world's two largest producers, is at its lowest point in 14 years. The combined output is now down 25% from its 2016 peak levels. And that's from my friend Tavi Costa. And so as gold breaks out to record levels, igniting a new bull market for precious metals, a major supply-demand mismatch is poised to drive silver prices significantly higher. So we have all of this going for silver in the long term, this supply-demand imbalance. And the only thing that makes supply meet demand is price. That's the leveler. And so from Peter Spina of GoldSeek, It says silver prices are nearly 11% higher now in China. So there is this divergence. And let me see. I'm staring into, there's a white cloud up there that's real bright. And so in China, here we have 24.48 on the COMEX and 26.67 on the Shanghai exchange for silver. And that means that somebody can buy in the United States and sell a futures contract there and then ship take delivery of the silver, ship it to China. And so what this causes is gold and silver are currently flowing from the west to the east, which is tragic in my opinion, because after this is all said and done, the west is going to be a lot poorer and the east is going to be a lot richer. I want to show you something that is happening in China right now that is quite amazing, and I want to read to you from an excerpt from the chapter, I believe this is chapter 8 in my book. But I'll play this. You can watch segments of this while I read the book, so we'll go back and forth from this to the book. And so Dan, if you can play this, and then go back to the booked text while I'm reading it. But these are people in China lining up to buy gold, and this is panic buying. And it's happened before, but not in China. The last time there was a big gold rush, it was illegal to own gold in China. That was under Mao. And so here we are with excerpts from my book. To give you an idea of the emotion and psychology that was driving the gold price in 1979-1980, I've included an excerpt from an early draft of my first book, so most of this got cut out of my first book. Gold had started rising from $35 an ounce almost immediately after leaving the dollar, but in 1971, anyone who said gold could reach $50 an ounce was considered crazy, and anyone who said that $100 was possible was tied up, hauled away, and placed in a rubber room. But in late 1978, it broke through the $200 barrier, and something changed in how gold was being traded and how gold was being viewed by the public. Gold was once again acting like money. Time magazine, June 11, 1979. Ingot we trust. In the past 2 years, a new brand of buyers has flocked to the market. American institutional investors. Some U.S. pension funds, mutual funds, and bank trust departments are putting a portion of their assets into bullion. Now, this has not happened yet. This is something that still lies out there in the future. When it comes to institutional investors, almost none of them have any gold whatsoever. So back to my story. In 1979, people started lining up in front of coin shops, and the phones were ringing off the hook at the commodities exchanges. Time magazine, October 1st, 1979, the glitter that is gold. From Zurich to Chicago, from London to Hong Kong, gold bugs are scurrying once again to buy into their favorite hedge against disaster. With people battered by inflation and recession, worried about oil, and lacking confidence in leaders and cures, the gold rush of 1979 has turned into a stampede. In the past month, silver has risen 65%, while gold has gone up 23%. The popularity of such tangible assets reflects a fast deepening distrust of all paper currencies. Essentially, the price of gold is an index of anxiety and a barometer of fears. Back to my story. Gold had begun September of 1979 at $315, and by October 2nd, the day after this article, it hit $426, a 35% rise in 1 month. Gold languished for the next 2 months, but then, on December 3rd, gold surpassed its previous high, and it was off to the races. Time magazine, January 28, 1980, stampede for precious metal. Last week, gold left even its most frenzied boosters gawking in astonishment. In 5 wild and erratic trading days, it leapt by an incredible 34%. It was one of the most dazzling run-ups in history, and it underscored the enduring psychological lure of the yellow metal as the most consistently sought after possession in times of strife and uncertainty. Harvard social psychologist Roger Brown compares the panic to the rush on the gates of the Who concert in Cincinnati that left 11 dead. Says he, the fear that they are going to be too late and left out causes people to stampede. In cities throughout the U.S. and Europe, people by the thousands lined up at jewelry and coin shops, lured by newspaper headlines of eye-popping new prices for gold and silver, and even by hourly news broadcasts on the radio. Again, none of this is happening yet, but it will. It's still out there in the future, so there is still time. Of course, the rise reflects intensifying anxiety over the world situation, particularly the crises in Afghanistan and Iran. Do we have a crisis in the Middle East right now? The Middle East has been this constant sore spot. But, when they say Afghanistan here, that's when Russia was trying to occupy Iran, or Afghanistan, I mean. And we had a problem in Iran. And so, but now we've got these other crises going on in the Middle East. And we are closer to nuclear war than at any time in history. Even probably closer than the Cuban Missile Crisis. In times of such grave concern, people are moved to switch out of paper currencies and into objects that seem immune to political travail. Observes Alan Greenspan, who, by the way, was not yet Fed chairman and was a big supporter of the gold standard. Gold is a store of value that governments cannot seize, devalue, or easily confiscate. Still, the U.S. eventually may pay a high price if bullion keeps leaping. If the dollar is worth only 1/800th of an ounce of gold, then it seems to be worth almost nothing. Well, today, the dollar is worth 1/2200th of an ounce of gold. Now, back to my story. I remember this fairly well. I remember watching the local news broadcasts and being amazed at the helicopter shots of the line of people waiting to get into a local coin dealer. This dealer was only a few miles from my home, located on a major city street in the center of the block, with sidewalks about 15 feet wide, and the line of people went out the front door, stretched down the block, filling the sidewalk, around the corner, and up the side street. The news media were interviewing people in line, and the lines were being compared to those of Star Wars and Apocalypse Now. Adding it all up. So now, let's add it all up and try to estimate just how much currency could come chasing gold and silver in the great gold and silver rush of the 21st century. Versus 1980, today we have 18 times more people around the world that can buy precious metals, 55 times more currency, 56 times more millionaires, 200 times more billionaires, 220 times more available consumer credit, 31.5 times more assets under management, and 49 times greater global stock market capitalization. Now, the reason I mention assets under management and the 200 times more billionaires is because these are people that can literally steer at any moment. They can steer $1 billion here or $1 billion there, and they have not been rushing into gold yet. So I'm going to skip to the end and read you that. But remember, price means nothing. Value is everything. So how much can you get for your ounce of gold? I believe that for every ounce of gold and silver you own today, you are going to be able to buy many, many times more stocks, bonds, real estate, businesses, and just about anything else you want or need. One day, the precious metals are going to amaze everyone. Make sure you come back and reread this chapter once gold goes soaring past $3,000, $5,000, $10,000 per ounce and never looks back, because the great gold and silver rush of the 21st century is absolutely going to take your breath away. And now I want to end with this meme. Currency wars. Are we winning? Well, right now there is this transfer of gold from west to east, and we're settling in currency, paper currency. When this is all over with, when all is said and done, the East will be far richer, the West will be far poorer. I am getting ready for the greatest crash in history, so I am bracing for impact. I am buckling up, and my safety belt is precious metals. It is gold and silver. That's my safety belt. What is your safety belt?
Well, Mike Maloney is not the only one. All the central banks are in a rush to accumulate more and more gold and silver as well, but primarily gold because again, it's like they're buying it by the ton. They're not buying it in small ounces. And now, keep in mind, gold is at a record price. 1 true ounce of gold is right now is close to $2,200, and also silver is I think it at record price right now as we speak. But this is again, there is not yet a currency collapse. But if you look at what the banks are doing, they're stacking their vaults in tons of gold every single month. They're buying more and more. So they're trading the fake currency that they're creating for the real stuff. And this is what every one of us should be doing as well. Instead of accumulating or trying to work for depreciating currency that they're creating, to convert this into the currency that is actually not getting devalued, the currency that they're stacking in their vaults. And again, it's like there is no better times to do this than right now.